Today is Wednesday, July the 31st, and this is the day that we've been talking about for the last few weeks because the Fed made their announcement. And of course, you can see it exactly when it happened in the Dow at 2 o'clock, in the NASDAQ at 2 o'clock, and in the S&P 500. So they were immediately hit by the announcement that the Fed would lower interest rates by only 0.25%. The market was hoping for 0.5%. And then when Chairman Fed Powell made his had his press conference, he said something about this was not any indication of what they might do in the future. And I don't know what else he said because I wasn't at home at the time, but you can see the reaction was pretty swift. We ended up with decliners leading advancers by 70% to 30%, which is going to take our stock market breadth from the neutral line down into the oversold area, but only a small amount. It's still going to be within this cluster here. Big red day, as you can see. You know, while we're on the subject of FinViz here, there's so much information on this page that I'd like you to take a look at. If you're not familiar with the head and shoulders pattern, they point out the top 4 stocks that are exhibiting those patterns, and you can see where they show you that where the left shoulder is, where the head, and where the right shoulder is, and then they draw the line between the head and the right shoulder to show you where the line of resistance is going to be. So if you have any questions about patterns, FinViz is a great place to show you stocks that are examples of patterns that are taking place. So now let's take a look at our charts. The SPX exhibited something really interesting today in that it bounced off of the famous trend line that we've been talking about for 3 weeks now. We've not been able to stay over that trend line except for 2 days. The gap that we've referenced, which seemed to be far away, was actually pierced today during regular trading hours. And if we go in, well, we won't see anything for extended trading hours. But with this type of a big candle, this is quite likely to lead to a little bit of a bounce tomorrow where some stocks may have just overdone it. Apple is a perfect example. Apple got euphoric after the earnings release last night and made it up to 221.50. And there were buyers there because there have to be buyers if there are sellers. But it ended the day at 216.47. And then if we show you what happened in extended trading, it ended the day even lower and it came in at 212.65 is where it's currently trading now. But in extended hours, it has closed that gap. And my own rule of thumb is, well, that gap was actually closed earlier, I think it was closed yesterday. We talked about this, it was closed yesterday. But just to make sure, the market came down and closed that gap. And after hours, let's get rid of it. It bounced off the 8 EMA, which indicates that there are still buyers looking for an opportunity to get into Apple. And depending on what happens tomorrow, if you want to be trading over the summer, you could get into Apple by selling some puts. And I'm going to take a look at some of those values tomorrow morning and see if anything is interesting, but I'm not going to go very big into selling puts. I'd like to own Apple. We also have a dividend that they announced. I don't know what the ex-dividend date is, but it probably is next Friday for a payout the following week. Nobody goes ex-dividend as fast and pays out as dividends as quickly as Apple, which I wish more companies would do. But Apple could very well see some buying taking place tomorrow. Let's see what kind of volume we had today. That's always important to look at. And we had a lot of volume. Now, because the price ended up lower than its open, we have a red bar here, but that's pretty high volume. That's as high a volume as we've seen since May. And we can actually go back in time, and we've seen a volume candle like that on January the 30th. But that's significant volume. That's indicative of large corporate entities that are buying the stock. The average trader like you and I can't produce the volume that's going to exceed a 20-day moving average. Let's now look at Caterpillar, which suffered, but did find support at the top of the cloud. Actually just a little bit below the cloud. So Caterpillar was double whammy today by interest rates not going down as low as people who buy equipment might like to see, and therefore traders, and also because of the news that the China-US trade talks have now been suspended until September. That should come as no surprise to anyone. It's doubtful that there will be a trade deal anytime in the near future, but the big surprise is that the gold mine has just tumbled out of this bull flag. So we can take that bull flag out of the picture now. It's no longer an indicator where we would have been looking to trade it above the top of that bull flag channel like we did here and benefit from this kind of a rise. So flags like this will move probably in the direction of the flagpole. And since this one was up, it's called a bull flag, and it would typically break out above the bull flag, but news can always change that. And look at the volume in the gold miners. I'm very glad that we no longer hold on to this stock. WDC is a chip company. AMD reported earnings today, which were not good. Their stock dropped 10%. This is the extended trading chart of WDC, and you can see that it dropped a little bit more in after hours. WDC would have reported after the bell yesterday, today. So that's what happened. Let's take a look at a 5-minute chart. I don't hold WDC anymore, so I'm not looking at it. But here's what happened in extended trading hours. It started to move up, and now it's moved down. So at 4 o'clock, it had closed right here, and it ended slightly down. So I guess WDC earnings were not bad. Let's take a look at how the stock performs tomorrow, because it's a really interesting stock. It's one that I've owned on and off for a long time. And where are we on the Fibonacci's? We're still above the golden ratio, 61.8, but we've lost the support of the 78.6, which is usually a sure thing indicator that it's going to go back up to 100%. But we've lost that now, so we would look at it moving above 55, 52 on reasonable volume to be something that we'd buy into, but we haven't seen reasonable volume on this since the middle of July. Whirlpool was a big loser today, not surprisingly. I mean, if interest rates didn't go down to the extent that some would like, then the interest-sensitive stocks like appliances are going to show suffering. This new trend line that we started drawing earlier this week, because we had 1 point and 2 points. So as soon as we had our third point yesterday, it became a viable trend line, and we had a sharp rejection this morning from it. I mean, it closed right at the top of that trend line yesterday, making it an official trend line right there. And today the selling started pretty much immediately. So it wasn't going to break through. Volume was not exceptional, so I'm still holding on to short calls. I'm holding on to 145 and 150 short calls that will expire on Friday. They made up for the majority of the loss of the stock today. So I expect that those 145 calls are going to be quite profitable. The 150 calls are already something that I can roll into tomorrow. So I'd like to see a bit of a bounce and roll the 150s at the open tomorrow. And the 145s I'm going to hold on until Friday. Caterpillar, which I've got short 135 calls on for Friday, are both in a position now where they're only worth 16.5 cents each. Tomorrow they're going to drop just with deteriorating theta. If the stock doesn't change, they'll be down to 14 cents, 13 cents, and they'll be definitely worth rolling into next week and pocketing a profit of some hundreds of dollars. So that's it for today. Tomorrow, I frankly expect that we're going to see a bit of a relief bounce. Sure, people were expecting 0.5%, but they know damn well that the Fed had no justification to lower the rates other than to help the stock market, which would have been a fool's errand. So I think there's going to be some relief that the Fed didn't do the worst that they could have done, and they've kept some arrows in the quiver for future weakening of the economy, particularly the global economy. Of course, the president wasn't happy, but I think that the Fed has shown that they really don't give a damn.